Hi everyone, it's Alex from Risk Academy, and in this short video I wanted to talk about my journey into insurance. So about 2 years ago I was given, on top of my Chief Risk Officer responsibilities, I was given responsibility for the insurance portfolio, and then it kind of expanded to the responsibility for the insurance portfolio over the whole group, and the group consisted of a couple of companies, each with about $6 billion revenue. So big global businesses, and I had responsibility for insurance. So I obviously, at the time, was relatively new to insurance, and so I hired a couple of insurance gurus, and together we've tried to combine and create this risk-based approach to insurance. And my hypothesis was that insurance is mispriced. Insurance coverage is disconnected from the actual risk exposure, and hence, by combining the risk competencies and the insurance competencies, we could provide the better quality of the coverage and, in fact, at the portion of the price. That was my hypothesis 2 years ago. Now, 2 years have passed, and I've proved both hypotheses to be true. We ended up saving just over $13 million in premiums, without reducing, not just without reducing the quality of the coverage, so not but by lowering the limits and increasing the deductibles. No, quite the opposite. We actually almost doubled the limits, and that saving is calculated before we even did anything to deductibles. We did, in fact, ended up increasing some of the deductibles because our math showed that it made no sense to retain so little risk, and it made more sense to self-insure, basically retain more risk on ourselves, because 78% of the time, and that's an actual calculation we did, 78% of the time we would save more on retaining some of the losses than on paying for lower deductibles to the insurance companies. But without any of that, so improving the quality of the coverage and not really touching deductibles, we ended up saving just over 13 million, which actually approximately 40% of the global insurance program. So I don't know if you've worked in insurance buying. I mean, that is pretty groundbreaking, to put it mildly. So that over the last 2 years, that just showed so many fascinating lessons that I will share in the coming videos on how to challenge, change, and completely reshape this relationship between the buyers of insurance, us, the brokers, and the insurance companies. And so in this video, this was a long introduction, just to put in context. I feel that I can say that I know what I'm talking about, because I've dealt and I fired most of the brokers that you can think of in the world, globally: US, Latin America, Europe, Asia, and CIS. And normally I wouldn't talk about a topic unless I had a very intimate knowledge of it. So I think I'm in a good position to talk about this next topic. So the first question that I wanted to uncover is how to choose the best or most suitable broker. So have a think about this question for a second. How would you choose the broker that is the best fit for the current risk placement that you have in front of you? And my answer is very simple. It's a trick question. The only way to choose the best broker is the one that brought you the best quality of coverage for the best price. That's the only way to choose the best broker. But then immediately comes the question, well, if that's the case, how can you choose the best broker before you go to market and do the marketing exercise? And that's where my answer lies. You don't. In fact, this is the biggest lie I think that the industry has been throwing down pushing down our throats as insurance buyers, is we have to select a broker and then that broker goes to the market. Nothing could be further from the truth. You don't select a single broker, and in fact, every single successful placement that we had at least 2, but more often 3 or 4 brokers working simultaneously. So we would break up the markets, even, and this is the lie that the brokers tell you every time. And we had couple of brokers who refuse to play by our rules. Yeah, no big loss for us, because the market it's the buyer's market, not the broker's market, that set the rules. And one of the biggest lies that the brokers tell you, oh, the market is so tight, it's hard, and all the other nonsense that they say. None of this is true, by the way, as we've proven. And basically every single hypothesis that the broker ever said, we've disproved, because we didn't have to believe them, we just tested the market, and the market told us otherwise. So one of the biggest lies they tell you is that there are very few companies that are interested in the risk that you're placing, and hence dividing the market between multiple brokers would be detrimental to the results of the placement. Again, nothing could be further from the truth. That is simply a lie that they tell to preserve their business and reduce the competition, and so they have to, and they're usually quite lazy in the placement process. They don't talk to the underwriters that we want them to talk to. And so we always, unless there's some sort of groundbreaking reason for not doing so, or some political reason for not doing so, but we would always, 99% of the time, we would divvy up the market. And in the next videos, I'll talk about 5 or 6 things that we use to divvy up the markets properly, because you really don't, it's obviously not a random decision how to divvy up the market. So first question, how do you choose the best fit broker for the insurance placement that you have in front of you? And the simple answer is you don't. You select a couple that, or 3 or 4 that are reasonable, that are decent, and that are able to provide you with sufficient statistical data to back up their promises. And I'll talk about that more in the next videos. And then let them fight it out. Let them fight it out in the open market, and obviously no unethical behavior. And we had a couple of brokers who tried to step in other shoes, but they've been generally pretty good about it. I had to warn maybe a couple of them to never ever do that again, otherwise they'll be blacklisted forever. But yeah, it immediately stopped. So there was very little kind of infighting that was going, or dirty fighting that was going on. I suspected a lot more because I wasn't really holding brokers in high regard. So yeah, they pleasantly surprised me. That many of them are decent people, and that's my answer to this simple question. I'm interested in hearing your thoughts right underneath this video, especially if you're broker and you think otherwise. By the way, I hired a couple of brokers to work for me in-house, and literally the first thing that they said when they joined were all the excuses you can think of for not dividing the market. And then a year later, I asked that person, I said, what do you think now? And goes, my God, how mistaken I was. The results that we got from divvying up the market between different brokers were just night and day. It was just fundamentally different. So I'm interested in hearing your thoughts. See you in the next video. Don't forget to subscribe to the channel, like, and write something in the comments. Say hello.